Okay, hi, good evening. Good evening to everyone. Welcome. So give me a second. Okay, guys, give me a second. I have some setting. Like this. Okay, sorry, sorry about it. There is some errors in my system into some settings. Okay, my test. Hey guys. Okay, sorry for the disruption. Okay. Yes, welcome to our tonight podcast. Sorry for the disruption. My name is Queenie. So today's class will be actually our Crypto 101, talking about the indicators and candlesticks. Okay, so before we start our lesson today, I believe many of you have saw the application. There is these notifications about the competition. So probably I will start off with this announcement first. Okay, so actually now from February 13 to March 13, there will be this UBC staking mining competition. So this is limited to share of a 30,000 prize pool. So the event overview about the staking of the UBC now, and you can enjoy a sharing of this 30,000 UBX prize pool. So enjoy the double benefit for doing staking. So limited spots available. So we are going for the first come first serve. So the top 10 largest staker each month will receive additional generous USDT rewards. So the more you stake, the more you earn. So giving you a head start in wealth appreciation. So how do you guys going to participate? So the most important is all the registered UBX account has to complete the KYC verification. So after that, you just have to stake the asset to mine UBC by selecting your preference amount and durations. So after that, you have to do you have to submit your staking order by the event form in this data. I'll show you the link. So then, and also share the screenshot in the UBX app community. So there's this Chinese community ID, which is going 2536300945735569. This is the ID of the Chinese community for Chinese participants who join this staking competition. So for the English community, there's the ID is as below. So once verified, the reward will be actually credited to your account. So take note of some event rules. So during the event, both new and the existing user can earn UBX by creating new UBC staking mining orders. So that's met the following conditions. So minimum at least you have to stick with a 30 days period. So minimum accumulative staking amount as specified in the table below. So later I'll show you guys. So limited reward slot available because it's on the first come first serve basis. So submission of the form with UID and staking screenshot is required. So the staking amount is calculated as UBX with USDT. So this is the form. So once you go in, you can actually change it to English and actually fill up your UID, the screenshot of the pledging or staking order, and also the screenshot of the of the staking order that you're going to forward to the APP community. Okay, so let's go back. Okay, so the stake mining reward structure as below. So staking more than $1,000 for 30 days, you will be rewarded 30 UBX. Okay, so there will be only 500 available. So the any first 500 will actually receive the 30 UBX. Okay, so anything more than 3,000 that sticks more than 30 days, you can actually receive 100 UBX as your reward. So available only for 100 slots. So the next is more than 10,000 USDT, the staking amount at more than 30 days. There will be 500 UBS given. There will be only 20 available slots. So the next will be 30,000 and above for more than 30 days. There will be 2,000 UBS given and only two available. So any first two that actually stake more than 30,000, you will actually receive additional 2,000 UBX. So monthly staking mining leadership rewards. The top 10 miner each month who have staked 5,000 and above for at least 90 days contract will receive additional USDT rewards. So the top first miner, top one miner will be actually rewarded with 200 USDT. The top the top second to fifth miners so will receive $100 USDT each. So from 6 to 10 will receive 20 USDT each. So higher VIP level, larger staking amount. The longer staking period increase your winning chances. So all participants have to will receive UBX as the base reward based on their staking amount and during the durations. So the top 10 miner each will receive extra USDT reward up to 200 USDT as just now I mentioned above over here. Okay, so participants automatically enter the leadership board ranking based on their staking amount and durations. Okay, so important to take note, the minimum staking amount to qualify is at least 1,000 USDT worth. So screenshot must be submitted via the form uh, and shared inside the UBS app community to consider valid entry. So top 10 miners of the month will receive additional USDT distributed based on ranking. So the leadership board will reset every month. So the reward will credit within 7 days after the event's end. So participants cannot claim from multiple similar events. Each user can only select one event to participate in. Reward will be distributed to UBS account within 7 business days. Okay, so fraudulence include artificial trading will result in disqualification. So UBS reserve the right final interpretations right for this event. So you guys can actually join as soon as possible because it's based on first time first serve basis. Okay, so without further ado, let us carry on with our episode 33, the Crypto 101, talking about candlesticks. Okay, so by understand candlesticks pattern, today we'll talk about the basics. So actually to how to actually learn the candlestick patterns step by step. So to actually is most of the experienced and also new traders actually able to read through candlesticks to understand the market sentiment better. Okay, by learning candlestick pattern, it also allow you to make better trading decisions. So candlestick is actually a powerful tool. Okay, so it's actually helping to gauge market sentiment. So it's also will provide visual presentation and of the price movement over specific time range. So as you see, you can candlestick actually show prices, price change in a clearer way. So they are actually look like small little balls with a tail on the top and bottom. So actually each candlesticks will actually tells four key prices where trading started, ended, and the highest and lowest point. Okay, so basically this kind of visual actually reflect the psychological of the traders and investors. So how actually also the candlestick actually shows the market sentiment as well. So how do we look at the candlestick? So main important is actually the candlestick is actually the main body. This is actually the main body. It actually shows the price movement from the start till the end of the trading. So actually there is this small thin line is actually representing the top and bottom representing the highest and the lowest price. Okay, so the color of the candlestick actually indicates the overall price direction of for the period. Okay, why I meant period? Because actually candlestick can be viewed in different duration, probably like 4 hours. Some people actually view in one single day. So there is many duration that you can open the view in the viewer to actually view in different time frame. So let's take a look. So how does a bullish candlestick looks like? So actually, when you look at the bullish candlestick, at this big point, actually is refer to the highest price. Okay, so rising price actually always indicate in green. So show when the price went up during that duration, the final price was higher than the starting price. So it indicate you would actually turn this stick into a green bullish candlestick. So over at this point is actually the opening is actually at the bottom. So this is the body. So when it turns green, meaning to say that it actually started with a lower price and ended at a higher price. Okay. So and there is this shadow, the wick tail, which actually indicate the highest point and the lowest point. Okay, next actually the other one is the opposite, which is the bearish candlestick. So this bearish candlestick actually shows when the price went down, the final price was actually lower than the starting price. That means actually when it opens, it's actually over here. So when it close, actually accumulate all the prices, the lowest prices actually, and close it at the lower point. So actually the candlestick will actually turn red. So at the bottom is actually the lowest point, the lowest selling price, and the highest selling price for this particular time frame. Okay, so let's take a look. So understand the timing in the candlestick chart. So actually each candlestick, like I mentioned just now, actually have a is actually shows the price over a period of time. So actually you can view the changes by changing the date, by viewing at the date, by week, or by month. So you can actually like for normal day trader, they will most likely like to look at the 4 or hourly time frame. So for a long term investor or long term to actually look at the price, I mean the crypto currency, I mean the crypto token pricing, they will actually probably look at probably 1 month, half 6 months, or even a year to actually predict the pricing for the crypto token. Okay, so let's take a look. So how does candlestick pattern works? So actually, you can analyze candlestick or use the candlestick pattern as a guideline to determine or predict the price movement on the next probably for the next prediction. So actually, there is a few ways. There's some people are looking at a single candlestick pattern, which actually formed by a single candlestick form up, which actually there's some terms called the hammer, some are actually the hanging man, uh, And also there is potential hanging man, there's potential reversal trend that actually will represent by this single candlestick. Okay, so next actually there is this prediction by looking at two candlestick pattern, which is actually some example like the bullish or bearish engulfing. It also indicates some shifting in the momentum. Okay, so next actually there is people actually looking at uh, the three candlestick patterns. So when actually the pattern formed by three candlesticks, it will actually have some confirm of the trend reversal. Okay, so let us take a look. Some actually this is actually how to actually see a full bar pattern is actually showing that there is strong pricing movement towards a uptrend or a downward trend. So like price when they move strongly higher, indicating actually a clear bullish momentum in the market. So let's say it's a vice versa when you actually see a very strong red candle, it's actually define a bearish pressure in the market. So market direction shows clear market direction, helping traders identify which kind of strong momentum, whether is it a bullish period or a bearish trend. So So let us take a look. It's actually looking at one candlestick doesn't really determine a lot, but at least it shows you some market sentiment during this period of time frame. So it's easier to see. Looking at one candlestick at a time make learning easier as well. It's actually a basic building block. So this simple pattern actually shows what are the sentiments of the traders at that point of time. So, and also every trader, this is a basic knowledge for every single trader that intend to trade in the exchange. So let us take a look single candlestick pattern, which is actually a very common. It's actually like a hammer. If you notice, a hammer actually the price ending price of the candlestick actually form up to looks like a very with a very little tip tail at the top, and actually it looks like hammer if you notice. So actually it shows the price might be starting to go up. Okay, when you see this single candlestick that forms up after the time frame closes, I mean the trading closes. So another one actually, if you notice this hanging man is like a man hanging at the top. So this actually shows price might starts to goes down. Okay, so but actually definitely this doesn't means confirm guarantee that when you see a hanging man the price will actually goes up, because candlestick actually shows only the sentimental and the price of confirm price of the trade transaction. So you need to actually also look at other trend uh, or probably other indicators like the MAs, like the moving average, and also some the RSI as well. So many indicators actually combines together. So today probably I will just talk about candlestick. What does it mean when you actually see a specific uh, candlesticks that shows in your graph? Okay, so next, so actually, there's this pattern is actually spots possible market reversal. So the actually the keys is to watch the confirmation from the next few price movement. So if you notice, actually this shooting stars actually it features a long upper shadow with a small body at the top, indicating potential downward reversal appear at the market peak. If you notice these shooting stars, does it look like a a reverse of the hanging man? So by right, actually, when you actually supposed to actually look goes down, actually this is also an indication whereby it's also a reversal that's actually going down. So an inverted hammer actually shows a hammer with a green top at the bottom, and actually the price was actually going down. Then suddenly you see this hammer, inverted hammer. It actually also shows a possible upward reversal trend. Okay, so it's actually usually at the appears at the market bottom of the graph. Okay, so this pattern often appear at key market turning point, signaling potential change of the price direction. So look for confirmation in subsequent price movement as well. Okay, so let us continue. There is this another kind of single okay, this is actually morning the doji star. Actually, when you look at this actually appears a lot of time whereby actually there is no clear directions. So a doji shows buyer and seller are actually equally strong. So the price actually started and ended nearly at the same point. That's why you actually didn't see any body forming up. Actually, you see like a inverted cross, a T. Okay, so this actually makes a lot of traders to actually need to double confirm to actually check on the next candle to see which way the price might go. So if the price goes up, actually this doji star will be called as the morning doji star. Okay, so when the price actually continue downward trend, it will actually shows means, I mean the second stick, it will actually shows means this is actually a name as the evening doji star. So this is actually caused by undecided uh, when the market cannot decide which direction to move. Okay, so actually by working with two candlestick actually give more clearer trading hints. So it also give a better telltale sign of what the directions of the market is going at. So using two patterns actually definitely make a better trading choice. Okay, so let's take a look at the kind of two candlestick uh, like the bullish engulfing. So in my you can see the small red candle followed by a bigger green candle at actually shows that the green candle is so big actually if you notice. So actually you see this red candle actually so when the second stick actually move towards a upward trend forming a green body. This actually indicates a bullish engulfing. So actually, if you notice, if you see this kind of candlestick pattern, probably you can actually start your entry on the third candles being before the third candlestick form up. You can start the entry, but do take note actually you need to be sure to make some stop loss because it might actually have a fake pattern shown. So you got to do some stop loss in case the market actually doesn't work on your favor. So probably you can actually prepare a stop loss over here. So if it goes up, definitely it's good. But when it actually moves towards uh, probably later I'll show you on the bullish engulfing, then you have to uh, probably cut your loss in case because you are predicting the wrong directions. So when you see this pattern, price goes up about at least 7 out of 10 times is actually going up. So when you see this, actually it most likely will go up on the upward trend. Okay, so because actually more people, it shows that actually more people wanting to buy than sell. So this usually means price will start going up. Okay, so this is very basic. This is purely only looking at candlestick. But other factors is actually like I mentioned before, you need to look at the moving average, you need to look at the stochastic and other indicator as well. So next, how does a bearish engulfing looks like? So actually, it will actually indicate when you see these two candlesticks stands placed together. It's actually shows the price are likely to fall. So watch for heavy selling volume. So might be having a very huge red candle, and also you might actually see subsequent. This is actually uh, popular for shorting. Okay, so people who short actually can actually probably short at the bottom of the tail. Okay, so when it actually goes down, but do take note as well, it's the same theory. You have to do a stop loss at the top just in case it moves towards another direction on the third stick. Okay, so next, let us take a look what is a pierce line means. Actually, it shows probably it shows the shows up when the price are falling. So if you notice there is these two, probably when it's falling and you actually see a equally stake came out to with a ending price confirmed. So it actually seems going up. So actually usually this actually it will move upwards for the price for pierce line to when it's shown. Okay. So this is probably also showing a reversal trend. So next, actually another two candle indicator is actually the dark cloud cover. So it's also signal price that actually may fall. So actually when you see these two from a green move on to a red candlestick with equal volume with two tails at the top, no tails at the bottom. So actually shows when rising price may stop. Mark a long green candle followed by a large red candle. Okay, so it's actually show. So watch for more signal before trading because like increased selling volume or continue downward movement. So probably you might need to take a look at the second one, and actually you can decide on the third one. You can predict whether it's moving down. So like the same thing, you can actually most likely for dark cloud cover, you are looking into shorting it. Okay, so this pattern actually help identify potential bearish reversal in the upward trend. However, always confirm the additional indicators before making any decisions in either whether short or going for. But most likely, when you see a dark cloud cover, a higher chance actually is on the price fall direction. Okay, so next, so why definitely looking at three candlestick actually shows a confirmation of a continuous pattern. So they will actually work even better than two candlesticks. So, uh, like mentioned, using one or two candle alone is definitely work. Three is definitely better than them. So it also shows better trading signal to give more defined purchase and buy and sell signals. So you need more time to learn and spot these three candles, how they actually what do they stand for. So there is this morning star. Okay, morning star, what how does it looks like? So morning star actually looks like this. When you compare these three indicators, actually it moved the pattern emerged when the price may have been falling consistently like a dark night in the market. But the price paused their direct downward movement, indicating potential shift in the market direction. So actually, when you see a small body with two heads coming out, so this actually called as the morning star. So when you see this morning star, it actually have a green. It actually have a engulfing pattern, so bullish engulfing pattern. So this actually shows the price likely to potentially go up. So this is a good sign that actually this pattern suggests the price moving upwards. So how to actually go and entry? Actually, you can start on the third stick, entry through the top of the pricing. You can price it at the top, and also definitely you need to do a stop loss at the bottom in case of it goes against your favor. So these are we call it as morning star pattern. So next, we have the evening star patterns, which actually shows is similar to morning star, but it actually shows the price going down. So price have been going up for quite a while, and actually it shows that the change is coming. It shows that the seller are taking control. That's why actually you see this evening star is forming up with a red body and two equal tail coming out from it. So when you actually see this probably on the next stick, and you also see a very huge red candle with a bottom tail. So this actually indicating likely to move downwards for the price. So a lot of people might actually once they see the evening star, they would like to actually short the trade and actually uh, predict it to move on the downward trend. So next, also there is for the three candlestick pattern, there is also this term called three white soldiers. It's actually shows using three candlestick consistently moving upwards. So in 3 days in a row, higher price or whichever duration you have set, it actually shows buyer are in control. So buyer are actually is a good pattern. Each day starts near where the last day began. So like it ended okay, it ended equally with the second candle. So if you notice, it's actually the top is actually equal to the bottom. So this is called as three white soldiers. So many traders rely on this pattern to spot upward price movement. Okay, this shows confidence in the buyer's market. So many actually will be actually purchased. A lot of buyers is actually purchasing the trade. Okay, so next actually you can see this is the example of a three black crow is actually the opposite of the three white soldiers. So it shows the price are falling steadily over a period of time. So actually, actually more stocks are actually sold from instead of being brought. Okay, so this actually is showing a downward trend. So it indicates strong bearish sentiments and confident in the reversal after an upward trend. So probably this trade is actually going up for quite some time. And actually, when you happen to see these three uh, candlesticks in this format, you is actually called as a three black hole. It's actually showing the bearish. Uh, the buyer is actually a lot of sellers is actually selling. Okay. So the three black holes X pattern appear after an upward trend, signal a potential reversal. So yes, so next, okay, using price pattern to spot trend. So just now, like I mentioned before, a lot of traders are actually using the basic patterns to at least have a guideline of how the market sentiment will be like. And after follow up by using uh, I mean to spot whether to short or to long. Okay, so by longing is actually expect predicting the price of the trade to go up. For shorting is predicting the price to go downwards trend. Okay, so patterns, but it doesn't determine a confirmation. Usually it's require more indications, indicators like the others indicators that I mentioned in my previous classes. Okay, so let us take a look at just I pulled out one Bitcoin, one of the state. So it actually looks like this, the upward trend, downward trend. So there is many. So it's actually if you notice when the indicators actually goes up, actually usually this seems like a hammerhead. Okay, so the hammerhead actually shows probably when it's supposed to go down, actually it shows a potential reversal. So it actually, if you notice, it actually moves up over at this point. So also if you notice here, this hammerhead, it might actually goes up. Actually, it shows that this probably is considered. Let me share with you. Okay, so if you notice over here, there is this plus over here, doji. So this actually also indicates that sideways movements. So the probably the market sentiment, all the buyers and seller are not sure whether to buy or whether to sell. So it doesn't move sideways. So all this actually shows indications, but actually, in fact, all these are actually past prices because it's not at the beginning. So just assume this probably the second candle is not formed up yet. When you see this, a lot will actually predict this will actually goes because this is a hammer. So for hammer, it will actually indicates a reversal. So people actually probably will start to do enter the trade for long and actually uh, place it place it at the bottom here. So it actually also moved upwards. So probably there is this period whereby it almost seems like a reversal, but it actually continue to go on towards the upward trend. Okay, so all these are actually candles sticks are actually the final pricing of the trade. So many traders actually use this as a guideline to see to probably predict the market direction, because all these actually are confirmed trades, and this also shows how the sentiments of the overall markets looks like. Okay, so actually, candlestick actually able to have a price level, but it's also very important to look at the support and resistance level. So price level actually where stock intend to stop falling. So if you notice, I mentioned before, support is actually a line. Probably if you look at this, this probably is a line of support level, and probably it will actually go upwards because of the support is there, is not able to break through. But there will also be a resistance level at the top. So when price whereby the stock intend to stop rising, we call this as resistance. So this also actually give you a guideline on probably how the whether are they will be a reversal trend, or whether will the price continue to go up and break out, do a breakout. Okay, so let us take a look. So support and resistance are actually areas where price previously bounced, where and act as potential buy zone. So a lot of buyer will actually look at all the support level and the resistance level to gauge whether to buy. Probably a lot will be buying at a support line, because probably that is the lowest price for the trade, and it won't go further downwards. But do take note, there is still potential. Okay, so by spotting resistance, actually locate the price store or reverse, is actually spot the potential reversal of trend. So let's take a look at the next. Okay, how to spot so trend reversal signals. So like I mentioned before, some candlestick patterns actually shows like doji, candlestick with small body indicating indecision in the market, looking for at the end of the trend. So doji actually indicate indecision in the market, often uh, visiting a reversal. So probably like if you actually notice a upward trend and you suddenly look at doji sign, a candlestick came out, probably is a time or it happens to actually stay put at the resistance level, and it's actually have a very high chance of going opposite. Okay, so when you actually see this doji at the very bottom of your support line, probably this also means that there is a very high chance of having it to reverse into a upward trend. So also with all these engulfing patterns, and when it actually hits the support line or the resistance line, is also showing a very high chance of trend reversal. So actually why we have to at least look at the support and resistance line while actually looking at the uh, candlestick, is also very easy to export the reversal signal. Okay, so divergence actually occur when a price of an asset and technical indicators such as the RSI or MACD move in the opposite directions, also signal a potential trend reversal. Okay, so when you actually see the price trend is actually going up, and but it actually you see some indicators in your RSI and or even on your MACD is actually going on the opposite direction, it's actually shows that there is higher chance that the trade will actually move towards the opposite directions. So a bullish divergence will occur when the price makes a lower low, but an indicator like the RSI make a higher low. So this actually shows potential in the upward reversal. Okay, so like for bearish divergence actually occur when the price is actually make a higher higher high, but for those RSI indicators and even the MACDs are showing a lower high, it also suggests a potential downward reversal. Okay, so these are also able to let traders to predict what are the direction movement of the trade as well. Okay, so probably this is a very smart trading rule for everyone to actually protect your money. Always set a point to exit trade to protect your money. So for a lot of people actually like always predict the price will always go up and will never reverse for any reason. But do take note when you set in, probably when you actually see a doji and you actually didn't stop your stop your loss, you predict a long and it actually moves towards a different direction and against you. So this is whereby you actually need to set an exit trade in case it continue a downward trend without stopping, and you probably might wipe out all your investment. Okay, so probably if you are planning to long on the doji, do remember to do a safe do your stop loss to exit your trade if it's not moving towards your favor. Okay, so also choose the amount of trade based on whatever you can lose. Okay, whatever you can afford to risk for. Okay, because there is higher potential high risk in trading, especially if you trade in crypto. You can earn multiple or even 100,000 times, but you can also lose 100 or 1,000 times. So do take note on the trade size when you plan for on your trading. Okay, so actually, actually patterns are is a dead rule, and everyone probably know this. You and I, and even the traders outside, even the manipulators, and even all the uh, institutions see we are actually looking at the same chart because these are confirm pricing indicating in the market. So we have to look at all these patterns to determine how does the market feels like. So after that, probably we can do some testing and try and predict you using paper trade or using different strategy after looking through the rest of the indicators that actually shows in the graph. Then you can actually uh, master it and also look at the market changes whereby when you predict it going on the upward trend and you predict the price going down at the specific point, you can understand why the market changed in this way. And probably you can actually also look through the news and also understand how come the decision is in this way. Probably there's a news in the Bitcoin, so that's why the price is moving up, and there is some bad news and it shows some doji, and also not sure whether is it going on the downward trend it will be continue moving up. So all these factors into all your trade as well. So the key point about candlestick trading. So candlestick actually chart actually help you understand the market. So it help you understand the market, but you need to look at a few more patterns before confirming or giving a decisions over whether is it going to potentially moving up or down. So after regularly practice and spot the patterns in the market, looking at probably at if you are looking at trading view, you can actually look at the market trend, predict the price, and probably you can actually see how well you can spot the pattern. Then you can actually improve. Maybe you have made a wrong indication or wrong prediction. You can actually just uh, go back and understand why are you under why, so why are these prediction moving on the opposite directions? So these are actually you can learn and practice regularly, and also see how much uh, candlestick pattern have you observed from the trading graph. Okay, so understand patterns actually make you able to trade better and able to feel the market sentiment better. So definitely there is limit to candlestick whatever what it can shows, because candlestick sometimes also can give you false signals. Okay, so even well-known candlestick patterns like evening stars or head and shoulders can actually produce false signals. People probably looking at it, probably moving on the evening star is actually moving downwards on the sorry. Okay, so when it's going to move on the opposite directions, it's also a trap for a lot of traders. So always probably use more candlestick to predict the movement or the direction, trend directions, because it will actually give you more confirmation on the market trend. So probably the best will be actually using the three candlestick patterns to actually give yourself a guideline. So also a match. Also, there's the limitations are is like sometimes the lagging of indicators, moving average being lagging indicators might confirm a trend too late, causing trader to miss initial profit potential and enter the trade near when it's almost ending. Okay, so these are some limitations that the candlesticks might cause wrong predictions. So, I hope you guys enjoy the lesson for tonight. And probably in general, identify trend line reversal signal is crucial for successful trade. Traders probably can use more combination of all the signals from the candlesticks to make the predictions, but do take note, do also have some proper risk management or assessments to enhance your trade and or strategy. Always broaden your market context. Probably look through the more news on the specific trade or specific investment you are looking at. With all the additional analysis, technical analysis like the indicators, moving average, before you make your trading decision whether to invest, spot, long or short, all this probably with all the indications, it can give you more preparations on your predictions. Okay, so thank you very much for joining me tonight, and hope to see you guys tomorrow again, and have a good rest. See you guys. Thank you.